Hey traders, what's happening? Jamie Setley here with the SB Trade Desk Midweek Strategy webinar. It is January 23rd. Patrick McKenna, what's up? How's it going? How are you, Patrick? I'm assuming, by the way, that you can hear me and see the screen. Yes. Just let me know that you can hear me. I just want to make sure. Hold on here. Yes. Okay. AV, good. Awesome. All right. Hold on one sec. I have to shoot this. I just had an email come across my desk, and I'm going to send it real fast because I'm a really bad multitasker. And all right, hold on. Okay. All right. Hold on. Okay. We are going to start now. Okay, so here we go. First thing we are going to look at is dollar Swedish krona. All right, so this we've been following, well, followed a lot, but we had this line here, this red line, right, off of the March and June lows, kind of pegged as a level. You see kind of danced around it here in mid-December, early mid-December, and then we cracked. We've now come back to it, tagged it along with the 200-day average, like perfectly. So what I wrote in today's update, which I was working on a little bit before I got on this webinar, is, you know, if dollar's lower, well, if dollar SEC's lower, but if dollar's lower in general, I mean, it's now, like now, right? Like right now. Can't imagine us going any further if we're going to break down in the dollar. So, you know, also I'd look at this kind of as a head and shoulders retest. You can see shoulder, head, shoulder, came back to, you know, essentially your breakout zone, if you will. It's actually probably right about on that low right there, right? So that's a pretty important chart. And then, you know, if we move along to euro, not coincidentally, today we did get to 110.40. I saw somewhere where today's ECB was the quietest ECB in 5 years in terms of price movement after the ECB. So my way to approach this is like we've hit 110.40. Okay, it's a pretty big level. You know, as outlined in yesterday's post, there's a bunch of stuff here, trend lines on multiple kind of degrees, you know, your shift fork from the bottom in October, you know, nailed the upper parallel, nailed the lower parallel, and now if you're up now. So kind of the way I look at it is that I don't think it's a bad trade to necessarily punt. What I mean by punt, right? A punt is just kind of like a feeler to throw out along against that level. However, you know, it's so quiet that, and I didn't really have much of a, you know, much in the way of like reversal evidence in terms of volume. Like if we had a volume reversal down here, I'd probably do it. But it's like, you might as well wait for a day, see if you can actually hold the low. You know, if we hold the low here for a day, at least you have some evidence. I don't think we're going up 500 pips tomorrow, right? I don't think you're going to miss the bigger move if you wait for evidence to suggest that we've actually held the low, right? Rather than, you know, going in. I mean, you could go in with like a tiny stop, like a 15 pip stop at this level or whatever. I mean, you could do it, but you might as well wait at this point. And on that, you know, I was talking about this yesterday in the post, and I'd like to elaborate on it a little bit here, you know, if we look at just, I'm gonna bring up the futures chart because it's super instructive on, okay, hold on here. What do I have here? All right. Actually, I want to bring in the daily one. I'm sorry. Hold on. I'm just making a mess over here, aren't I? All right. Okay. So let's bring in, I'm going to get rid of some stuff real quick. Get rid of that. Get rid of that. All right. So the bold line here is your volume weighted average price for this year. So like whenever I have the bold VWAP line, it's the annual one. And if you're going into like a trending year, right? What are some of the trending years we've had? Well, clearly 2014. So let's just go over 20. Here's what 2014 VWAP looked like, okay? You can see that we rallied up through it. We actually found support on it, went to a high, broke below it, came back into it, and then it was a complete collapse. The next real trending year you had was 2017. And in that case, and that's the year that I'm kind of looking at is maybe, just maybe some sort of a similar instance to now, right? You had an up, down, up to a new high, down, but held the low. Right now you have an up, down, up to a slight new high, and down and held the low barely. This is future, so it's gonna look a little different. But once you broke through the VWAP level, that's when you took off, right? Let's even look at last year's. So last year, VWAP, and we hit resistance on it multiple times and then failed. So if we look at this year, right, that's going to be 111.65, okay, on futures. Spot is trading 110.54 right now, and we're 110.90 in futures. So you've got like a 55 pip, discount that you're trading at. So take 55 off of this, and you're going to get at this point about 111.10, right? So that gives us 111.10 as our 2020 VWAP level. You get above there, and then you have an actual signal to go long rather than completely guessing, right? And that's when I would be real interested in a long for euro dollar. Okay, so that's kind of a good example of, maybe looking for the bigger move. Today could be the low. I have no idea. It's where it should be as far as holding support, but again, we might as well wait. At least in my opinion, about how that's how I do things. Might as well wait until you get up to that spot. So that's what I'm looking at in terms of euro and how I'm approaching it. All right, let's go back. Let's look at US dollar. Kind of no man's land here still. We did tag that 200-day average. You could still get support on 12,260. Bigger resistance could still be a hair higher near 12,350. And that's that. So not much to change here. We've looked at this one a bunch of times, right, over the last couple of weeks, and I think I had it in the update from 2 days ago. So whatever, just making you aware of it. Let's take a look at British pound. I don't have an update in British pound today, but it was in yesterday's. And in this one, I'm looking for this. So there's two things. One, this is big A, little b, right? Little b is even a perfect A, B, C, 1, 2, 3, 4, 5. And now we are looking at either big C in a zigzag up to 133.34, or this is wave C of a triangle, in which case you could stop near 131.90 because that would be alternating legs of 618. From a trade perspective, I want to buy basically 130.84s, okay, with a stop under here. So you're giving yourself like 50 pips of risk. And one reason why I want to do that at that level is that volume weighted average price for 2020 and for VWAP back off the low in late December are both at the same exact level, about 131 in futures. And again, if we look at spots trading 31.23. So spots trading actually, well, 31.23 and you're trading 31.45. So it's like a 20 something pip discount right now on spot to futures. So you'd be looking at 30.80, excuse me, on spot for equivalent VWAP level. So that's where we want to buy it. And that happens to be the high from Tuesday. Okay, so we've got a good spot to look to enter a British pound long to take it. Again, I think the maximum you're going to get out of that is going to be 33.30, but that'd be a hell of a move from here on a near-term basis. So let's see if we can get triggered. Also like this trade because you're protected by a high volume level at 130.56, okay? And that's always a plus. Dollar yen, which I do have an update on today. First, we'll look at the actual price chart. So we did hit support today from the 38.2 of the rally from the 1.7 low, which was, of course, the start of, in the very brief World War III with Iran, right? So we did hit that level. That's why 109.28 was on the levels list, right, as a spot. We also went to the full channel extension level. So this could be a low. However, you do have a little head and shoulders top here. You do have the line off of all those highs back from November and December that we ran into. You've got RSI divergence on the top. And we have what we could have a slingshot set up here, right? Remember the slingshot setup, you draw your channel line. If you come back to it and find resistance, then you continue down in the direction to the next target. I do have a target at 109.10 because the high volume level is 109.04. I do think that 108.65.75 is probably a better target to look at. That's the year open and 618 level. So I actually am looking, if we do get up to 109.70s, which would be considered, it's a lot of things. One, lower channel. Two, all this over here, all these highs from December, you know, clearly a little bit of a pivot at that zone. And you've got a VWAP level, which I'll show you in a second, but that's where I'd be looking for resumption. So I might be actually looking to short more into that level, okay, near 109.70. And let's take you to that VWAP chart. We'll just bring in today's update and show it. All right, so here it is. So you can draw VWAP off of the low, all right? And at this point, you can see it's going to inch up, right, as we go on. But it's that level is going to be pretty close to the equivalent of 109.70. So remember, this is yen futures, so it's going to be flipped upside down. It's a little different, but the logic remains the same, right? Yen support is dollar yen resistance. So you also got, again, like I said, little head and shoulders. So that would be the level that you need to respond at if indeed you are going down lower in dollar yen. Take a quick look at Aussie. Not a lot to write home about on this one. We've traded on support, right, from the top side of the trend line back to December. We had that pop on employment last night, and we failed. I was thinking maybe you could get squeeze out up towards the 168.90s area, but it literally, that was all you got. And US session open, and they bought the dollar because that's what they do every day. Bought the dollar, bought stocks, and at the end of the day, you go nowhere. But for here, it's breakout needs to just be above this at this point, right? You got a new high volume level at 68.72. That's from employment. Get above there, get above 68.80. Then you're working with something in terms of a possible long position in which you'd be looking back towards the 68.60s. But until that happens, I'm in wait and see mood and have no interest in doing anything in terms of the Australian dollar. Kiwi dollar, I showed low today at 65.81.1 on multiple platforms. They just had some news come out. Was it CPI? I'm not sure. Either way, this is going to get up and out of here now, right? You are testing the channel level. And then, your next spot's going to be 66.90 or so. So that's the level to pay attention to up here, which is the center line. This is a really great channel, by the way. This is like something you'd use to teach a textbook on trading pitchfork. So, you can see center line, pullback, lower parallel, median line, right? Pullback, median line, pullback. So if we do get up and out of here, great. Then you'd be looking at the next level, 66.90. But don't forget, this is probably a fourth wave because we've got 1, 2, 3, 4 looking higher in 5. And if we fail and head lower, then we're probably interested in longs near 65.60 or so, which is going to be down here. Okay. If I bring in the volume weighted average price stuff, you can see you're actually trading about the same. 66.17 right now is where you're trading on futures, and spot is trading at 66.17. So they're the same. It makes it easy. And remember what I said, 65.60? Well, guess what? 65.60 happens to be the volume weighted average price from RBNZ back on November 12th. So there's multiple ways to do volume weighted average price. You can do it from a high, low. You can do it on the annual basis, which I like to do as well, or you can do it from a significant level. And a super high volume level is obviously a significant level. So you can see when you drew it from this hour, right, in RBNZ back on November 12th, what happened? You continue to ride it, you exploded. That level comes in at 65.60. So if we do fail and get down to 65.60, I'd be awfully interested in buying it, not just because of the price chart, but also because, of course, you'd have the volume weighted average price there. Take out that little low from 12.17, 12.18 would be a beautiful setup as well. So we'll see what happens here, but that is what I'm watching with Kiwi. Dollar CAD, we're able to take a target today on that. It's like the opposite of what happened last week with pound. Remember, we had a pound dollar target and I was an idiot and moved it up 10 pips and then it didn't hit it. Missed it by 1 pip. That high on pound. That high on pound we had last week was stupidly, I had put it at 31.20 and we traded 31.19. And I actually put it at, just as low on my platform was 65.801. Talk about a hair, literally. Yeah, no kidding. So yeah, I mean, whatever. Sometimes rather be lucky than good. But anyway, the opposite happened today with dollar CAD. The high was 31.71.5 on this platform. So we got out at 31.70. We pulled back. Really want to short 31.80s. I mean, you've got, again, the underside of the trend line all the way back to 2017, right? I mean, beautiful spot there. You've got 2 legs up. Splitting hairs here. This thing pretty much channels in a corrective fashion. You also got, which I don't have on the chart, but I do mention it in the post today, you've got 618 retrace at the same level. So, there's just so much there. I'd like to see if we can get into that spot first, and then maybe, look for a trigger or look to trigger a short. At this point, right now, until we get clarity that we're not going to get there. In other words, like if you get like a clean 5 down, say like on a 10-minute chart or something like that, 5-minute chart, whatever, overnight, then, maybe get a bounce. We'll look to short that. But as it stands right now, I'm in wait and see mode here as well. Like Aussie, right? Similar to Aussie, I like the short side and dollar CAD from very close to here, but we didn't quite get it, so you might as well not chase it at this point. But we'll see. So lining up there as well, I think, for a short at some point. Now let's go to some commodities. Okay. So gold, to me, this is still acting pretty good. I mean, you've got, let's see what this looks like. You did come into a level. I'm just kind of looking at this price base right now, but you can see this high here and this high here, right? August 13th and then September. We have held that spot, right? Yesterday's post, I was talking about the volume stuff, and what you've got there is constructive as well. So, you've got a 3-wave drop. We had a rally, kind of held the 618, right? Got a real high volume sale 2 days ago, high volume bar, and that bar is held as support for 2 days. And then today we cracked above VWAP off the high right here and VWAP off to 2020 open. So, gold's constructive right here. I said might as well get over a price high, 1568.80, before, saying it's the real deal. But gold looks constructive here to me. Again, risk to reward, you can't really predict where it's going, but this is what you want to see. I mean, let's follow kind of the anatomy of a setup, right? 3 waves down. All right, that's bullish, right? Rally, 618 retracement, that's a positive. High volume level exhaustion on the low, held the level, that's a positive. Pushing up through VWAP, that's a positive. Those are the kind of things that happen before you get a solid, surprise, quote unquote surprise move to the upside. So liking what gold's doing here on a near-term basis. And then, of course, it's always helps to look at silver with that. Now, look what happened on this bar, 121, the 9 a.m. bar, 9 a.m. where I am at least, right? That was right here. Guess what? Silver went to a new low beneath this low. Gold did not go beneath this low. It even happened today at 7 a.m. this morning. Gold held the low. Silver did not hold the low. It dropped just below it and then recovered. In other words, you're seeing, kind of prolonged divergence on silver. And silver is really trying to hold on to that VWAP back to the December low as well. If I bring in a 4-hour chart, we actually had a nice little volume spike bar this morning as well. Let's see what those look like. If I bring in just bring in a 4-hour chart of silver. Okay, we're going to put on the spike bar. So it's okay at times. I mean, you've had some decent signals, right? Back here in September 8th, 2018. Could be better. I wouldn't trade on that alone, of course. I wouldn't trade on any one thing, right? But the fact that you've got the divergence with gold and the volume spike bar is, to me, kind of a positive. And when I bring in just our silver price chart, this chart looks pretty good. You know, 4-hour chart. Let's go 4-hour chart. So again, we held the 200 average on the 4-hour. You can see that the pitchfork, all the way back to the November 2018 low, right? You can see the median line acting as something of a barrier. Silver is a little more sloppy than gold is usually, but we did hold the top of the zone that we talked about, which is 1740.65, and we held the 65 spot. And then you can see kind of as well the 25 line getting, action around it, getting action around it, getting action around it. We're right at it now. So if we can get going, and like I said yesterday, get over that 18, kind of 19 level, then you're in business with that as well. So at this point, I'd kind of put silver and gold in the constructive camp. And yeah, that's about it. All right, let's take a gander at crude oil. Okay, so crude oil. Let's just review real quickly what I was looking at yesterday, or not yesterday, but in recent weeks. So we had noted that we held, hold on here. We had some really big volume today on the lows, which could be a good thing. We had VWAP off the low from October. We did hold it. Remember, we held it over here on the 15th. And once we broke below it here yesterday, early in trading yesterday, I said kind of that's it, right? And sure enough, we did dump for a while. But a few things. One, on the volume front, we got a 4-hour reversal today. And we've had some decent ones, right? You had one back here at the September low. And this only goes back a couple of years, so that's going to be about it. Hold on for 1 sec, though. Okay, sorry. All right, so we had one today, again, at a level, which is a good thing. The price chart in this case is going to be a little more telling. So if you just look at this, you go back to the 2018 low December and draw yourself a beautiful channel. Guess where your high was, right? That was, of course, the Iranian attack, bombing, whatever you want to call it, tagged that center line to the tick, okay? Pulled back, low today to the tick, right under the 55 spot, which is a big area in and of its own right. That's a February 2017 high. Really, it's where we took off from too, right here, November 2017, right? Even had a little bit of a bounce there in November 2018, right? It's clearly a big level. I mean, just look at 55 bucks. So, took out lows here from November of this year. Seems like we're there every November, I guess. So, yeah, 55 is huge. I'm looking for us to hold this level. I'm cautiously bullish, I guess you'd say, against today's low. If we failed to hold today's low, you probably don't have anything until $51, right? 51, pretty damn important as well. You can just look at the chart, look at the price history of all the times you've reacted around 51 bucks. So yeah, want to hold this. We're going to start getting into the bullish seasonals for crude oil. It's more or less after January, but if we can base here, throughout the rest of this month, which there's not a whole lot left, there's like a week left, that would be a positive, because if I bring in seasonals, you can see that crude does tend to rally really through the first half of the year, generally speaking. So like, seasonals bottoming out, kind of right early February, and then you take off. And historically, the best month of the year is actually April, and then you go into a May high or something like that, which I think actually last year, well, that was October, but We had that happen last year. We bottomed very early on. Of course, everything did. And then we were up till guess when? April high. So doesn't happen every year, of course. Otherwise, it'd be a really easy game. But generally speaking, you've got you get the wind at your back with the first kind of four to 5 months of the year in crude. Okay, so I would pay attention to that over the next couple of weeks. See if we can base here. If we can hold, it's like a lot like Euro right here. If we can hold this 55 area, for a couple days, make a little base, that would be a positive in light of several things. One being the channel, 2 being the horizontal level, 3 being the seasonals, 4 being this little measurement, which I think was about 618. Holy moly, it was. So you take from here down, all right, measure from there. This from here to here equals 61.8% of here to here. Okay, so that's pretty awesome too. So a lot of reasons to be, thinking that the carnage is about done for crude on this move. I mean, that's a great chart. Look at that channel. Ding, ding. All right. I want to bring in some stuff on equities here real quick. So remember, I updated the long-term charts on December 31st, right? This was 3340s in the S&P 500. Go to the long-term page. You can read about how these levels are identified. High so far. Hold on. Why is it not showing up? I guess did I draw it somewhere else? Hold on here. Oh, there it is. Okay. So yeah, here's the monthly. We're looking at, this is the full extension, right? Or 2.5, and it's just extended off of the tech bubble high or the 2000 high or what have you. And we've now reached that level. So what was the high so far? 33.37.77. So 33.40 is the level. So that's, I pay attention to it, give or take. I mean, we're talking about something that goes back to the 1870s here. So that's what I'm on alert for. I mean, clearly the sentiment stuff is crazy. We've got DSI in the 90s, I think, on a 5-day average for the NASDAQ. But, we did have what I thought might have been a good signal yesterday on the 4-hour or 8-hour chart, right? On NASDAQ, we had a volume spike here. Let's just kind of look at that real quick. So we had that here, and again, a volume spike or volume J spike, whatever, reversal is all you're looking for is a range larger than the average range, okay, for the bar. And then you need volume to be a certain level. The higher, the better, right? Yesterday on that reversal bar, you had 2.2 times volume, okay? So it's pretty good. And it's rare enough to, it's not going to give you a bunch of false signals. You did have one back in March of 2019. That was the last one. But if I look at, I'll go back like 3 years or something. If I look at a 3-year history of it, right, you can see that you had some decent ones. I mean, we had one here that was on January 24th of 2018. That was 2 days before the high, and then the crash, and then the VIX apocalypse, and then you actually got a buy signal. Buys always tend to work better, right? Sells are really hard. You had some good ones in 2018, including the high in August of 2018. S&P made its high actually in September, and the NASDAQ did not. A decent one in July. My point is, it's close. It's good enough to pay attention to, or to be aware of. We haven't really followed through on it, so I'd say that if you get below today's low, that'd be enough to say that something's cooking, something's going on. Bringing in for perspective, kind of some bigger picture charts here, or price charts, excuse me, for the S&P. So we've got a couple channels here. We've got a couple channels. One, all the way from December 2018, and two, a really short-term one from October. So let me zoom in on that a little bit. Okay, 75 line was hit today from the one off the 2018 low. All right, today's drop found support right here at the center line, just as we have on the last two so-called dips, every dip from this year. January 10th, January 15th, and today. So you get below there, then you're starting to actually have some sort of a behavior change, because we haven't had any sort of behavior change yet this year, right? We haven't broken below the center line. So you break below the center line, then you're looking at the lower channel line, which is your extremely steep uptrend, and that's going to be 3260s. It's also going to be the center line of the channel from the 2018 low. So mark that area, okay? It's more or less that low there too. You can kind of say the January 10th low is important at 3261. That's your key, what I call the breakage level. And you're saying, well, that's really far away, right? And it is, it's 65 points away. But like, it's at least a trigger that something's happening, right? I mean, you were trading 33.40, you trade 32.60. After that, if you start to break down, then you're talking, 31.70. So like, there's a lot of spread there, and maybe something more. But you need to see, you can't run before you can walk type of thing. You need to walk a little bit first on the bear side before you can run, and we just haven't done it. You can have all the signs of the top and all the extremes and this and that, but until you have that first little crack, you're not gonna get a big crack, right? So the first little crack really doesn't happen until 32.61 in my book, okay? And that's where I am going with S&Ps. And just for fun, let's see where the VWAP levels come in on S&Ps. All right. So your 2020 VWAP is going to be at 32.78 or so, which is in line with these lows. And your next one's going to be 32.30. So break 32.60 and you will have broken 32.78 2020 VWAP, and that would be enough to probably get the train rolling downhill for a little bit, right? Okay. Where are we? We did get a divergent reading on that little push at the end of the day on the NASDAQ on a 4-hour chart. You can see that from, see the little magenta dots, right? So we've got like multiple signals. We've had plenty of divergence on the way up, but we haven't had divergence and volume and all that stuff combined, and we do have it now. So we'll see. All right, well, that's all I've got for today. So If there are questions on anything, I'd love to take them. Otherwise, I'm going to wrap this up and try to get it archived for you as soon as I can, hopefully sometime tonight. Patrick says, thank you so much. Much appreciated. Have a good one. You too, Patrick. Everyone else. Pooja says, a quick look at Euro seasonals. Sure thing. So Euro seasonals actually aren't great. I know that. So Euro seasonals, you can see here we are. Actually, you get a bottom on this week, and then you're up until mid-February. The main major, whatever you want to call it, seasonal bottoming point for Euro is actually, it depends, but like on a longer term basis, it's on a longer term basis, it's like the first week in February. On a short term basis, because the market's been more bullish the dollar in the recent past, right? It's going to be in like early March. Which, let's look at DXY because I got more history on that. So, all right, here you go. So here's 2.7, right? Tend to go into a dollar top. The major dollar topping week is the first week in March. Okay. In my dream scenario, yeah, Chip says, what's up, Chip? Says the NQ shot up 30 points after the regular market close. Yeah, after the cash close, we did, and that's what created the divergence as well, right? So you can see here. So here was that little pop to a new high, and you had that divergence. So like RSI way below 65, and then here we were. So I know that was primarily Intel earnings. And we'll see what Intel does. You know, let's see, Intel. In the night session. So yeah, Intel's up 7.5% after hours. Okay, so you can see there that's kind of going to be why that happened. Which brings me to want to look at Intel. But real quick before I do that, like I was saying, in a dream scenario, you start to roll over a little bit, then you get a stabilization and a bounce into March, and then you can just go full bore into the short side. But that's just a dreamy scenario and not really working with what I'm being given, just kind of thinking out loud. All right, let me look at Intel real fast. Okay, so here's Intel weekly chart. And where were we after hours? We were at 67.31. Well, holy shit. Guess where the upper parallel is for Intel? It's like right at 67.31. So that's an important chart. So like if we hold up all night, Intel opens up at that level, I wouldn't be surprised to see it sell off from up here. It's a level, put it that way. So pay attention to that level, okay? Save that chart. All right. Okay, so that's it. I'm going to archive this video here, and then I'll send it out to you once it's done. All right, everyone, have a great rest of your week, and I'll talk to you later. All right, bye.